By focusing on the currency, the rupee touched a fresh all-time low of 84 rupees per dollar before strengthening somewhat to 83.80 to 83.90. Bond yields have also risen a bit. Latha is here to sum up the action in the currency and the bond market. Latha, over to you.
Well, the stock markets gave us a feeling of rebound, but the rupee market is telling us that the foreigners' selling has not abated at all. Actually, on the feared foreign selling and actual selling, the rupee in early trade itself went all the way to 84, and thereafter the Reserve Bank came in and supplied dollars, and it did dilly-dally between 83.80 and 90 for a bit. But it has started slipping since, and although experts tell us that the worst of the carry trade unwind is over, the market is not convinced at all. The flow of, the depositories, the custodians, the guys who actually work for the foreign funds, selling and taking away dollars from the market is continuing. And so that sense that yesterday was 10,000 crores of FPI selling, something big is happening even today. One cannot assess the number, but they're not buying bonds, okay? The foreigners are selling equities. There is no selling in bonds. So the uncertainty is there in the market over, is the US in a recession or not? What will the Fed do in terms of timing of interest rate cuts and extent of interest rate cuts? Because the range is huge. Almost everyone has gone from one rate cut expectation in September to at least 3. People like JP Morgan have gone to 7 rate cuts, like 50 basis, 50 basis, and 125 is what they're expecting. So that's 125 basis points cut. The market is full of these kinds of expectations. And also, Indian exporters and importers are unhedged because the Reserve Bank has kept the currency in a narrow range. Even when the range shifts, it shifts ever so slowly. So when you're unhedged, there is even greater fear in terms of what you may be exposed to if the global markets are extremely choppy. So markets are in a state of uncertainty, no taking away from that. In the yield market, it has been much more steady. Yields fell just about 6 or 7 basis points yesterday in response to the nearly 20-30 basis point fall in the US. And today they've recovered by all of 3 basis points. It's come up from 6.84 yesterday, the 10-year bond, to 6.87. Fairly steady over there. And of course, over there, action is less because everyone's eyes are fixed on the Reserve Bank's policy that's due on Thursday.
Very interesting updates. We'll keep an eye out on the number that comes in later this evening for the FIs. Latha, thanks a lot for that. By the way,